Today, we're going to look at a stock with a PE less than 12. The stock pays a dividend, and it's pretty close to its 52-week low. That stock, of course, is FedEx Corporation. What is going on, investors? Hopefully, you guys are doing well out there. We'll take a look at FedEx today, which reported their Q3 earnings. We'll take a look at the revenue. We'll take a look at the revenue growth. We'll also jump over to the numbers like we always do with this company, and we'll see what is impacting this company from a cost perspective, but also their income and their revenues. We'll also look at this from a technical perspective as well, as this stock is consistently broken down over the last few months. We'll talk about that and more on today's show. Like I led off with, this stock has less than a 12 forward PE. We've got a $3 per share dividend, which is about 1.3% yield on this one. And you've got the 52-week low, about $200 per share. And in the after hours, the stock's trading about $227 per share. That was reporting Q3 earnings, which came in at $23.6 billion. You have a market cap on this one at $53 billion, $57 billion. And you got revenue in just one quarter at $23 billion. We'll talk about this from a valuation perspective here in a moment, but that revenue was 9.8% year-over-year growth. Now, what was interesting about FedEx is obviously we've seen the transportation costs. All you got to do is go to your local gas station and you're seeing that energy costs, obviously a company like FedEx is going to absorb a fair amount of that. Also, you have labor inflation as well, certainly impacting this company. We'll show those to you when you get to the financials here in a moment. But I did want to talk really quickly about the valuation. Now, I do have UPS up here in a blue line. That stock is always traded at a premium to FedEx. We're not going to get on here and argue that or question that. It's just what the market decides to do with UPS, and they're trading it closer to 2x sales. I think more importantly, when we look at FedEx here in this orange line, is we see that is actually approaching a low in terms of I have a price to sales multiple up here. It's actually approaching a low that it made back in March of 2020 when it was close to 0.36 times sales, not 36 times sales, not 3 times sales, 0.36 times sales was what this was trading for back in March of 2020, when obviously a lot of stocks were just getting hammered. And FedEx at the current time is trading about 0.6 times sales. Certainly not a rich valuation, but we'll obviously look at these numbers, and then we've got to look at this from a technical perspective as well. But from a valuation perspective, a traditional valuation perspective, certainly not a stock that is at all overpriced. Now let's jump over to the financials over here at FedEx. We see here we've got our 3 months ended here. We see our revenue growth for our most recent quarter grew 10%. You went from 21.5 billion up to 23.6 billion. You see for the 9 months, since this was Q3, we went from 61.4 billion all the way up to 69 billion. That was good for 13% year-over-year revenue growth. Now, but what we talked about here in the beginning is obviously fuel costs is just impacting this company tremendously, up 59% in the quarter on fuel costs. And you see for the last 9 months up 72%. Now, it did translate down into our total operating expenses. Those were up 9% year-over-year on a quarterly basis, from 20.5 up to $22.3 billion. You see for the 9 months, paints an even worse story, quite frankly, up 13%, up 57 billion to 64.7 billion. But in the most recent quarter, the company actually did a really nice job driving operating income, and I'll talk to you about why that is. That went up 32%. So despite just growing your revenues by 10% and increasing your operating expenses by 9%, they grew their operating income actually by 32%, from 1 billion up to 1.3. And most of it had to do with the fact that they're driving more and more of this operating income down through this freight segment. And that's what has me excited as someone that's really interested in FedEx stock, is the fact that the freight segment up here, in terms of their big three revenue, in terms of their express ground and their ground segments and their freight segments, well, the freight is the fastest growing at 23% year-over-year on a quarterly basis, and up 21% over on a 9-month basis. Take a look at the operating income, also growing very rapidly and becoming a very significant portion of revenue for this company, up just 183% year-over-year on a quarterly basis to $337 million. Very significant for this company going forward. Now, from a balance sheet perspective, everything is about the same as you were last quarter with FedEx. Burned through just a small amount of cash, but nothing significant. The long-term debt, everything is equal to last year. From a cash flow perspective, company printed a little bit less cash than they did last year. Last year they were at 7.4 billion. This year at 6.3 billion. Company's spending about the same on these capital expenditures. The expectations, the company outlined it in their press release, basically in line with estimates. All things being considered, very nice from a cash flow perspective when we look at FedEx. Now, what is not nice with this company, look, they're trading near a 52-week low. They've got an incredibly low valuation from a price to sales, price to earnings. You get a little bit of a dividend as well on this one, but technically this one has broken down, okay? We're making a series of lower highs all along here and a series of lower lows. We'd expect this to break at some point, but you do have to wait for that moment. A signal that that moment is on the horizon would be a break above this trend line with a large, or typically a large green candle getting us up above the previous sets of highs, which were up here at about $254 per share. We do have some areas of support here with FedEx. I have them in these thin red lines. There's an area about where the stock is trading right now. It actually doesn't surprise me that the stock is kind of hesitating right at this $228 per share level. That it has acted as an area of support in the past. You get underneath that, you have an area of support down here, really all the way down here at about $180 per share, which should take you about $10 to $20 lower than the 52-week low on this stock. I tell you what, you get down to that level from a valuation perspective, a dividend yield perspective, I think you can pretty comfortably be buying this company. Now, we do have to keep in mind, we've got those massive fuel costs that are impacting our revenue over at FedEx. That's likely not to turn around anytime soon. You had a fair amount of salaries and employee benefits, although in the most recent quarter, just up 3%. For the last 9 months, up 8%. That certainly will impact earnings going forward with FedEx. Look, you're not going to build your entire portfolio around a FedEx type stock. You certainly would like to have a little bit more growth in that, even if you are one of the older viewers or you're, more in conservation mode. A stock like FedEx certainly can have a position in just about anybody's portfolio. I think you need to pick it up at the right price. And right now, from a technical perspective, we'd like for this one to actually get up a little bit higher, get above this area of about 228, 229, even maybe closer to 230. That would get us over this level of support. I worry that this stock is just going to continue to break down. But as we approach south of $200 per share on this one, that is something that I think you could be a little bit more aggressive buying, not necessarily waiting for that bounce back or that reversal pattern to show up from a technical perspective. That was FedEx. We'll be back again soon with more videos. Thanks for tuning in today. Good luck with your investments.